Good afternoon. This is Chris Brecher with the Chart Patterns Mastery and the free video for simpler trading for March 13th, 2025. What's this about today? Well, more of the same. We're getting a lot of negative sentiment though. And I want to show you because I do a lot on stock twits. I know I've harped on that a lot. But I just want you to know I have 57,200 followers on there. You can follow me for free up here, stocktwits.com, Christopher Brecher. But I put a lot of posts. I hardly ever brag. It's just, it's content is king. That's what JC always says. And it's definitely that it's built a lot of warm fuzzies with subscribers, so to speak. The key in here is on the way down, you want to look for W patterns. That's number one if you're going to buy. You want to buy on the way up. We'll go over that in a second. This is your problem. That's at 1:33 p.m. Do you see on how the volume was so low? Well, if you go in now and you go to volume, you're going to see with TradingView, if you go over here and put QQQ, after this kind of sell-off, your volume should be a lot more than that. Somebody argued with me on StockTwitch, said, but it's been a lot, percentage-wise, a lot over the last 2 weeks. I'm talking about the crescendo. Just like in a concert, they might be going up and up and up in volume, but it's that last cannon shot for the 1812 overture. So as you see in here, you just didn't have that spike in volume. You could have a big rally, don't get me wrong. That's only one piece of the equation, but you sure aren't seeing that spike in volume. How about the spiders? No spike. Yeah, that's a little of a problem. So that's a negative, but I'll try to give you some positives or I'll try to find some. The one thing I want you to realize in here is a friend of mine, Jeff Hirsch, I asked him to put this on Twitter of what the post-inauguration statistics are. And you're going to see that in here, 7 weeks and a day into Trump 2.0, it's the fourth worst post-inaugural performance since 1945. Now, I'm not saying that has anything to do with pro, con, all that, but it does have to do with something that's a big deal. And what is that? If it goes down enough, Trump does like to measure himself with the performance of the stock market. I wouldn't be surprised if the market stayed down for him to really soften his stance. As you see in here, if you go 7 weeks in, check that out. Wow. Wowzer. So just keep that in mind. If this stays down, it's down even more today, I think you're going to start seeing some softening of rhetoric. So like I said, I texted Jeff and he was nice enough to do that. Now, the next thing I want you to see is this. In the long run, that's the transports and the Russell are at their weekly 200. In the long run, I think the S&P is going there. Not yet. But just keep in mind, most sell-offs end at near the 200 on a weekly. They just do. I mean, whether you like it or not, they just do end near the 200. So I wouldn't be surprised to see it eventually go there after an oversold rally. The problem in here is right now, the investors' intelligence, the AAII and CNN Fear and Greed are a trio of real bearish sentiment. It's not going to take a lot of taking your foot off the rhetoric to have a massive rally. So keep that in mind. That's why you got to look at both sides of the equation. I'll try to show you a couple of ideas about that. So just want to show you that. The other thing, buyback blackouts. Just keep in mind that most companies voluntarily don't buy back stock 5 weeks prior to earnings. This is that's 35 days. You're going to see in here that most of the companies, like the JP Morgans, they report early. Apple reports late. But this window is when most of the companies don't buy back stock. Like I said, it's voluntary, but most adhere to it. I wouldn't be surprised to see a rally into the buyback blackout, and then you have that last test of the lows. So I want to show you precedent of that. So we're going to go back in here, and we're going to go to Thinkorswim or Schwab, whichever one you want to call it. And we're going to go over to the Russell on the left on a daily chart, and we're going to go the S&P on the right. Now, I know I've showed this ad nauseum, but I'm happy to show it again. There. So on the left is the SPX. On the right is the RTY. Or you could do the ES, so they're both 24 hours. So what I want to show you in here is this. This is now. So right now, you're under the 200. So just keep that in mind. You're under the 200 on the ES and the Russell, under the big red line. You see that, under the big red line. So, and they're both oversold. Now, keep in mind, I'm going to go to the rewind function of Thinkorswim. And we're going to go to 2023. And we're going to go over here to October 18th. What you're going to see in here is the markets had a nice rally, the ESs, around October 18th. A little earlier than that, once the Russell stabilized. Once the Russell stabilized, he had a nice bounce. That also corresponds to the height of probably the backload of the buybacks. So right before they go in the blackout, they like to buy back a lot of stock. Then what happened is you got overbought on a MACD at the trend line break. That's when you look for your short trigger. Just keep in mind, when we talk about shorts, I did a class on the art of short selling. So I think if you get an annual membership with us, you also get the class for free. It's an expensive class, but a lot of people have found it handy. Just keep in mind, there's always somewhere to short. Kramer says there's always something to buy. Well, I always think there's something to short, but I'm not a perma bear at all. If I see a bull flag, we're buying. If I see a breakdown, we're shorting. So I'm a totally just opportunistic, but you got to have that in your hip pocket of how to short. But when you got overbought right here on the bottom, like I'm showing you, that corresponded to when companies, a lot of them are in the buyback blackout starting the middle of October. Then go and look what happened by October 31st. There you go. Got nailed, as you see. So what happened after that? Well, really about November 2nd is when most of the companies have finished their earnings and they buy back in earnest. This is 2023. So go into here and go to November 15th. And look at the explosion to the upside. That's why they always talk about November is historically strong, because then companies can buy back stock. So this corresponded almost to the day where most of the S&P companies could buy back stock. So now, fast forward to now. You have the sell-off that looks terrible. Obviously, it looks terrible. It's straight down. I wouldn't be surprised to see the Russell stabilize on the right, see this start to bounce on the left, get back up to the breakdown. I wouldn't be surprised to see it get over the 200, in fact. Work this off by getting back to overbought, because if it gets over the 200, everybody's going to say, oh, it's reclaimed the 200. We're back in a normal market. Just like everybody said, oh, you're going to stop at the 200, which I poo-pooed. If it reclaims it and gets back to the breakdown point, then you're going to have a lot of bearishness worked off and you're going to have time for another leg down. So just keep that in mind. Now, that being said, with the Russell that I think is going to start stabilizing, I want to show you something very interesting. So what do I want to show you with there? I want to show you that there are a number of stocks I watch that stop going down. The theory is that if the Russell starts stabilizing on the right, these stocks will be the leaders because they were volatile and they stopped going down. Let's give you some of them. IONQ. Believe it or not, NVIDIA. Now, what are we talking about? We know markets have gone straight down for weeks. I mean, not every day, but straight down. Go to an hourly chart of both these stocks. And what do you notice? They stopped going down last week. Yeah, believe it or not, I know that's hard to believe. They stopped going down really on Monday, the 10th. Monday the 10th. On the other hand, the NASDAQ is at a new low. So you're starting to see some stocks turn the corner. To me, turn the corner means at the minimum getting over that hourly ATR trailing stop. Now, what's interesting is, do I have themes that might work? Yeah, I sure do. So let me give you a couple of them. Nuclear stocks and uranium stocks. Those could be a place to go. So let me show you what we're talking about. Uranium and nuclear, it's not a lot. Go to these charts. I'm going to put in a daily on the left, and I'm going to link them and put an hourly on the right. And I want you to see this because I think it's pretty fascinating. Go into some of these. NNE, as you see it, refused to go lower. Look at that. U. I don't even know how many U's. That's refused to go lower. This is an ETF. Not as nice. I want to see him really turn the corner, but at least on an hourly, it might be a bull flag. How about OKLO? A lot of people watch that. No, it did not hold. BWXT, no. SMR, no. NLR, maybe. PDN, maybe. VXT, yes. Look on how that is all the way up here. So I'm just telling you, there's going to be pockets of strength with these uranium stocks. And then you can go into some of the old high flyers. You can go into these. Go into GANX. How about Mind Melt? You know, the one that does the psychedelic stuff. Well, I don't like that chart. I'll show you the one that we bought was Beam. At least that has an area of coagulation. So we're in Beam. How about one of the wildest of them all, GRRR? Well, there was a short report about it. What's wrong with this stock? Well, they have all of 2 clients, like 95% of their stuff. Remember, of their business. Remember, I warned you, do not go near a big old trend stock like this until it comes back and reverts to some moving averages. Well, it has. But in a bad market, it's going to have a tough time leading. It tried today and then fell apart because it's a momentum stock. But there are a lot of small stocks that are trying to turn the corner, and we'll try to go with those. Now, on the other hand, here's a learning experience for you. When you're doing the ES or the Amazon, any of them, we're in a downtrend. You can see that a mile away. Hourly is in a downtrend. You can see that a mile away on the right. When we saw an hourly downtrend earlier, when you see a 15-minute get overbought, and just take the prior little bottoms. Don't make it harder than it has to be. Take the prior bottoms, got overbought, and then you look for your short trigger. It's right from my class, by the way. So put the 15-minute on the left and then go to a 1 minute. Did you see a short trigger? You sure as heck did. You saw a bear flag right here. Right there. You saw a bear flag. And a number of us did short right there. It was a good one. So I'm just telling you, overbought in a downtrend is a great place to look for a short trigger. The problem is you don't short just because it's overbought, because you don't know how long it's going to stay up. You wait for the break and the consolidation. That's been working. So tomorrow, what do we do? Well, you're getting a lot of bearish sentiment. If I can see an hourly chart in the ES look like Amazon on a 1 minute, and I'll go back to it on StockTwits and show you. If I can see this on a 1 minute chart, an hourly chart in the ES, like this, that rectangle, if I can see that, then I'll try to buy on the break, because then I'm buying on the way up, and I'll do a swing long. So take care, have a great night, and thanks for listening. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.